And I think also in terms of structural reform within our labour market, one of the biggest challenges that we've seen is this quiet quitting type thing where people go, I'm just not going to work anymore. And it comes down to a value system and fabric of society, which I think we've lost our way on, which is that not working is just simply not an option. You need to be a contributing member of society in whatever way that needs to be, and engaging people back in the workforce, whether that's through training or into roles that are rewarding financially, but also more than that, rewarding from a relationships perspective. And COVID particularly was hard. Work from home. Work isn't just about somewhere you go to get paid and do a job. It's also, particularly for younger folk, as you know, is the social fabric that comes alongside
of course,
that too.
Yeah.
And that's something that I think has just been eaten away in the post-COVID world, and somehow we've got to work on a way of rebuilding that. And that quiet quitting and labour force structure, I think, is a really bearish issue for our economy. Hey guys, welcome to the 6 Money and Investing Show. This week we're providing our economic and market outlook for 2025 for Australia, the place we all get to call home, and some very, very interesting factors both on the positive and negative side of things here. As always, make sure you take plenty of notes, but most importantly, make sure you take plenty of action. We'll see you in the show. Hey guys, welcome to the 6 Money and Investing Show with me, your host, Andrew Baxter, and as always, my offsider and co-host, Mitchell Olarenshaw.
Good to be back, Mr. B. Now, last week we did our US market outlook for 2025, and if you haven't listened to that, go and make sure you do. Today, though, we want to get more local. Let's talk about our Aussie market 2025 outlook.
Oh, indeed, yes. The perennial question in the economy that we live in. So how's it going to be? Is it going to be a great year? Is it going to be a mixed year? And I'm sure we'll uncover that as we go forward.
Absolutely. And once again, for our listeners, we're not here trying to predict the future with a crystal ball. We don't know what's going to happen, but we are aware of economic factors and elements which we know can either be bullish or bearish for markets. So we're going to talk about all those. Let's start off with the bullish case. And I think for us here in Australia, really the main thing is interest rates and inflation.
Okay, well, those two things are inextricably linked, aren't they? And we've had a reasonably stubborn level of inflation, and obviously the RBA, the Reserve Bank, their mandate is to get inflation back within the bands, and they've stood their ground toward what was a fair bit of government pressure through 24 to say we're not cutting rates until we see what we need to see. So what does 25 have in store? I suspect we're probably going to start to see the rate cutting cycle commence, I think very, very gingerly and very slowly at first, but I suspect we're going to see that. The challenge to that view is that 25 is also an election year, very likely an election year for Australia. And as a consequence, you're probably going to want to see a little bit of window dressing from the government. And that typically comes by way of throwing money at the voters, which is in itself inflationary. So if we start to see a lot of that, then it may well put the handbrake on any suggestion of a sustained period of rate cuts here in Australia. That's probably the biggest risk to it. And
I think us as consumers have probably struggled with where the goalposts sit, because we initially had the promise from the RBA a few years ago. Right. Then we had expectations of rate cuts this year, middle of the year. Then they'll push back to the end of the year. And now it's pretty likely we're not going to get any until a good amount through next year in 2025. So if you're someone out there who's, let's just not going to say this, but banking on interest rates coming down lower just to keep yourself afloat, it's going to be a fairly long, drawn-out process.
It will be, and look, without blowing our own trumpet, we've called the rate cycle particularly well here in Australia. We called it well before, and we said we're going to start to see rate rises, and we've said you won't be seeing anything for a long, long time, which we've also called reasonably well. But other than the lap of honour, what does that really mean for someone? You're right, a lot of households out there have been struggling, particularly with mortgage stress and affordability. And that light at the end of the tunnel, like the rate cuts coming, I wouldn't be banking too much on that being very, very early on in the piece. And so this continues to have an impact on, for example, consumer confidence and consumer spending, which is a massive thing, particularly as we go through periods like Christmas, for example. We've seen people spend large amounts of money, and then the credit card bill comes in, and the pain then subsequently comes on the back of that. So, it's a very, very tough one. We need to see some really big structural changes, I think, in the Australian economy, in addition to lower inflation, to see a sustained period of rate cuts. We're in a very difficult position right now. Skills shortages, and we'll get onto some of these things on the bearish case in a moment, I'm sure. But labour costs have been such a massive thing that have resulted in interest rates being as high as they are.
So interest rates do come down lower, though. Let's make that assumption. That's going to be great for the stock market and for the economy, right?
Yeah, I think the banks might struggle a bit. It's a bit of a poison chalice for the banks because on one side, a rate cut means more consumer spending, which is a more buoyant economy, and banks typically do well in that scenario. They also do really well when interest rates are higher because that margin of let's use the term gouge for want of a better term today.
House always wins, right?
Absolutely. Between the savings rate and the borrowing rate is fatter, and therefore they've got more margin in there. You saw that Westpac came out with cracking numbers the other day. A lot of that's come from that higher sustained period of interest rates. So it is a bit of a poison chalice for the banks. Lower interest rates make it harder to actually earn your profit.
Okay, so we've got interest rates on one side of the coin. Now, our relationship with China and the Chinese economy. A lot of the Aussie stock market is made up of resource stocks. Right. About a third of our stock market by market cap is resource stocks. Now, let's just make the assumption that we do see a bit of an uptick in the Chinese economy. That's going to be a good thing for us, right?
It would be for commodity prices, resource companies in particular, which, as you rightly say, is such a big slab of the Aussie economy. China's in a really tough spot in itself.
Yeah.
I mean, if you take the 3Ds, debt, deflation and demographic issues that are there right now, the Chinese government have been spending trillions to prop up its economy, to write off bad debts and to try and keep itself in good shape. When we saw what happened, for example, with Evergrande, and the insolvency side in the construction space. And construction, as we've talked plenty of times here about, is such a pivotal part of your economy. It affects everything. If you've got a really strong construction sector, should I say, rising tide lifts all ships. It employs lots of people. It uses lots of raw materials. It creates economic growth. It creates lots of positive tailwind, but they've got the reverse going there. So you can see that that's possibly a major headwind for Australia and its resource companies. But also, remember, China has got other resources around the world potentially coming on tap. It's got its iron ore supply. I think it's Equatorial Guinea, where they've got an enormous iron ore mine that they've got a sovereign right to, and they're going to start to mine. And you wonder what that then does for the competition within the Aussie economy, and also the tie-up with countries like Brazil, which we saw last year from a geopolitics basis, where let's call it the axis of mischief, a group of countries, should I say, that are looking to move out of US dollar-based transactions and working through renminbi and yuan as their exchange in Brazil is obviously part of that, which is a major iron ore exporter. So that could exert some pressure on the Aussie iron ore sector as well.
Now, you mentioned briefly before as one last factor.
I'm sorry, Mitch.
That's okay. We've been doing a lot of talking recently.
Like Marge Simpson.
That's right.
Homer.
Changing government. What kind of impact would that have, good or bad?
Look, I think in terms of a bearish case, the challenge that we've got with the incumbent Australian government, whether that's Prime Minister Albanese or his emissary to the US in the form of Ambassador Kevin Rudd, they've done they've done plenty of dumb things in my opinion, but particularly so when it comes to their relationship with the soon-to-be sitting president of the US, where you've had both of them on the record for trying to look cool or have a little bit of kudos, sort of besmirching President Trump, referring to the leader of the free world as a village idiot probably isn't the ideal conversation to have, especially when you're the ambassador to the US. And it was easy to make those comments when Trump was dead and buried and had failed to get re-elected, and you think, well, he's done, I can say what I like, he's back. And he's someone that doesn't particularly like criticism, fair or unfair, levelled at him. So that's going to put Australia out of the tent a little bit when it comes to negotiations on tariffs. We have this view that, we're in the tent, we're all part of the same team. And I'd be very, very cautious if I were the current government as to relying on being in the tent there with President Trump and having a forgiveness of tariffs for any Australian exports that go to the US. Some humble pie might be needed, but I think either of those parties, certainly in the case of Albanese, has refused point blank to sort of apologise for the comments, and you can't imagine Rudd's likely ever to do that either, given his ego issues. So, both of those people have caused us major problems, and we're in bed with America from a trade perspective and also a defence perspective, and you want to stay on side with your allies. You don't want to make stupid, silly schoolyard comments to try and earn kudos when it comes with a very significant consequence for our economy.
Oof. That was fairly hard hitting.
It's all factual. Go Google it. And these are the people that we've got representing our best interests.
Which is crazy. Let's now get stuck into the bearish case then for the Aussie market next year. Now, we briefly spoke about this. Let's string it out a little bit more. China, the US with China, and also our relationship with China.
Well, I think if we talk about the US's relationship with China, China's strength on the global economic stage has been without question over the last 30 years. It's got stronger and stronger. It's the world number 2 economy and most definitely is a superpower. And the US is obviously positioned, relatively speaking, as denigrated as a consequence of that. I think a new administration in the US is likely to penalise or at least try and quarter heel China very, very strongly using tariffs. That's been widely spoken about on the run into the election. And is probably not a bad thing. If you think of the consequences and the advantages that China has from a trade perspective, from a pollution perspective, look at the amount of lithium roasting that goes on there, the volume of coal-fired power stations that are being used, yet the West is being forced to have clean energy by 2030 or 35 by mandate, and these guys have got a different, I guess, agenda that they're being allowed to prosecute. So the US is likely to use tariffs as a way of evening the playing field up a little bit there and returning some critically important manufacturing, particularly in technology, back to the US. That's not great for the Chinese economy, and what's not good for China is not good for Australia either, given the fact that they're obviously our largest trading partner. So, that tariff situation towards China and the knock-on effect of that is very significant, as it will be in terms of a direct relationship of tariffs from the US to Australia too. It's not as big a trading market for us, but nonetheless, it's a very, very important one, and you'd see any tariffs as not being great for Australian businesses.
Okay. And if their economy continues to travel in the way that it is, we know they've had plenty of stimulus packages. They've been, actually dropping their interest rates, which is counter to the rest of the world because they're trying to stimulate their economy, all of which has been really underwhelming.
It's not moved the needle hugely because I think that the quantum of problem in China is vast insofar as the construction-led boom, which was relocating people from rural areas to the city, the property market move that went up on the back of it, the amount of people that have invested in the property market, and now they're in effectively, as we've seen plenty of evidence of, ghost cities, buildings that are never getting occupied, in some instances buildings that are never going to get finished, with Evergrande and others kind of falling over. Steel is the main part of construction, which obviously iron ore is a huge component for, and the weakness that potentially a sustained slowdown. How do you get out of that problem? If you've got an oversupply of empty homes and apartments that you've built, you can't go, okay, let's stimulate the economy by building more homes. That's the problem in itself. So that angle is probably not open to China. Looking to do other things potentially is, and we have to work very, very hard to continue to maintain a trading relationship in good order with China. And that's where the problems really start to kick in, because on one side, Australia has got a strategic defence relationship with the US and the UK through AUKUS, and that's something that's not sat particularly well with the Chinese government for various reasons, and you can understand some of them. And yet that's also our biggest trading partner. So we've got a defence and strategic alliance with the opposition of our major trading partners. We've got ourselves in quite a pickle there, which happens when you have successive bad leadership.
That's right. Now, two terms we could probably intertwine together would be wage inflation and also productivity here in Australia. What is your view on those two, and how will they impact the market?
I mean, wage inflation has been brutal. I was talking to a buddy of mine who's in the construction space. And to give you an idea, he's just done an apartment building. He's a solid player. $275,000 it was costing him to build a unit 4 years ago. Now it's $630,000 to build the same unit.
Wow!
And the majority of the input cost that's gone up. Yes, materials have become more expensive. Everybody knows that. Energy costs are more expensive. Everyone knows that. But the biggest single contributor to that is labour, and particularly in trades.
It's crazy, isn't it?
You've got trades that are pulling down. And I don't begrudge anybody their income because it's a supply and demand equation, but we don't have a volume of trades to enable us to build more than the 85,000 houses a year that we've got here right now, and that is a major pinch point in our labour market. If you look on the other side of the coin, if you look at the road safety, for example, I've got another buddy who's got a massive business in transport safety, road safety type stuff, and you got someone operating the lollipop stop go, and they're pulling down 150 grand a year. which is really hard to get your head around if you're someone that's working your backside off in a warehouse or a factory and you may be pulling down 70. So there's certain areas within the economy where there have been, skills shortages, so to speak, where you've seen, a dramatic run up in wages, and that's where a lot of the pricing pressure has come from a wage perspective. So being able to get staff, retain them at a competitive rate is very, very challenging, and I think there's something that we've got to look at with our labour laws. It becomes very, very hard when you've got a finite supply. We're a small country and we've got expansionary plans, so we need a bigger workforce. I don't know, I reckon, without going off on a personal tangent too much.
We always got to have one of those each episode, don't we?
I think what they're doing in the US, in terms of going through, or what they're proposing to do in the US, going through the government sector and cutting out all the fat and getting those jobs pushed into the private sector is not a bad thing. I'd be inclined to do the same thing. In fact, I'd probably abolish state government and have anyone working for state government getting into the private sector, and then you get productivity increase because you've got people that are working to create rather than on the cost side of the ledger, which is the biggest problem. And that in itself is a challenge for Australia. We need to expand our GDP. We'll see politically, and we're getting into a political phase of the year for us here in Australia. Yeah, we've created all these jobs, but 70% of them, 75% of them have been government-related jobs or public sector jobs, and that is not job creation. That's a cost to the taxpayer. And yes, we all need essential services, but some of the stuff that's being spent there, I think, is criminal. So we need productivity increase for sure. We need a more competitive labour market for sure, and those things are very, very, very important, and they're really deep scars that are going to take a lot of work to really fix up within our economy because of the nature of how our economy is currently structured.
Last question for you: what's your view on retail here in Australia? It's a big part.
It is, and like the poor old retailer has just been melted to all intents and purposes. Although that's not strictly true, there are stocks like JB that have continued to be stellar performers, Harvey Norman stellar performers because their business model's a bit different. But I think the amount of insolvencies we've seen, it started with construction, that seems to have eased off a little bit now. Stop seeing all these big builders falling over, maybe we're getting some consolidation there. But we've also then seen it through retail. Where lots and lots of companies, I think Nonny B, Rivers was one that went under a little while ago, and this year, like within our team, particularly Nick and I have spent a fair bit of time travelling around Australia, and particularly to country towns. And when you walk down the high street and you see vacancy to let along the high street, it tells you everything you need to know, and that's the fact that people aren't spending in that area. And you look at it and you go into a shop and you go, like, you got two people working here, which is probably costing you $35 an hour. Maybe there's three working there. There's $100 an hour plus your rent, plus holding all this stock, and there is zero foot traffic.
It's tough to justify.
We might be there on a Monday or Tuesday in the daytime, but it still gives you a window into what's going on. I can't imagine Saturday is that much busier, to be perfectly honest. And so people are shopping online, which is why companies like Amazon and so on continue to perform in the way that they do. So I think it is a very, very difficult landscape for retail particularly. The world has shifted massively. We've talked previously about department stores and the way that they've kind of lost their way, and will they ever come back? Probably not in the way that they were. I think it's a very, very difficult landscape for retail, and retail is a big employer. It's also a major tenant in the commercial property space too. So if you've got structural weakness there, you've got a weaker commercial segment of the property market that's struggling. You've also got a large element in the labour market that's not there either. So they're two factors that are not great to see anecdotally walking around, and I hope that changes, because you can't have a desolate town with a bit of tumbleweed blowing through the middle of it and a white van dropping your Amazon stuff off. You lose the fabric of what that town is really all about. And I think also in terms of structural reform within our labour market, one of the biggest challenges that we've seen is this quiet quitting type thing where people go, I'm just not going to work anymore. And it comes down to a value system and fabric of society, which I think we've lost our way on, which is that not working is just simply not an option. You need to be a contributing member of society in whatever way that needs to be, and engaging people back in the workforce, whether that's through training or into roles that are rewarding financially, but also more than that, rewarding from a relationships perspective. And COVID particularly was hard. Work from home. Work isn't just about somewhere you go to get paid and do a job. It's also, particularly for younger folk, as you know, is the social fabric that comes alongside
of course,
that too.
Yeah.
And that's something that I think has just been eaten away in the post-COVID world, and somehow we've got to work on a way of rebuilding that. And that quiet quitting and labour force structure, I think, is a really bearish issue for our economy.
Interesting. Well, there we have it. That's our bullish and bearish factors for the Aussie market. Anything else that springs to mind, AB?
I think housing is a huge one because it's the single biggest cost for people. And until we get our act together and we're able to increase the supply of housing that's available, we genuinely will continue to have problems there. And the knock-on effect of an expensive housing sector is great for landlords like you or I, but rent is such an enormous part of people's income now that it does affect their disposable income on what they can spend on other goods and services, which is a negative in itself. We need more supply of what's going on. Why can't we do that? And maybe it's red tape. You know, we had the affordable housing scheme that was launched, and which we covered extensively in this podcast. And as far as I'm aware, we haven't seen one new house come out of that as yet, just another big pile of government spending that's not really led to an outcome for people, which is a real tragedy. So we need to see something looked at within our property space. And if we can get that right, then I think that's a major underpinning, I think, for our broader economy. But if we try and engage a higher build rate than the, 85,000 or so houses we currently build a year, and their expectation is to build 1 million houses a year or hundreds of thousands of houses a year, that also then counterbalances the notion that we've got a skill shortage in our trade space pushing prices up there. So there are issues at all of those levels that really need to be fixed up to insulate us, I think, from the risk that comes from that property space. And it comes back down to youth training, engagement, and having a career path for people, and having more people wanting to go into that career path.
It's interesting, just as we talk here, AB, when you draw the comparison to our episode last week on the US market outlook versus this one in Australia, our factors, or our risk factors, seem to be so concentrated really between housing, China, and also interest rates, whereas the US, I felt as though, had so many more variables to deal with. It's just, I think, a result of being a small country, as you say, it's so concentrated in what we're dealing with.
What are we, 1.5% of the world's stock market? We're about 0.8% of the world's GDP. So we are very proud to be where we are on the bottom side of the world over here. But at the same time, we have to recognise that we are a very small part of the world from an economics perspective. You know, the tapestry in the US is far and wide because it is the world's superpower. And I think sometimes we have delusions of grandeur as to what our stance needs to be. There's no reason in the world why we can't have one of the most amazing, and we do have, that's why we live here, let's face it. But we could be a real superpower on so many lengths, but there's not been a vision to channel this. And I appreciate I'm going to get a clip around the ear roll for going off topic here, but it is what it is. There's no reason why Australia can't be the world's greengrocer in terms of being able to grow food for the world here. If we re-irrigated our Murray River system, we'd have the ability to grow enough food for everybody. We make less money from gas exports than we do from HEX debt, which is just incredible that we can be in this situation. We're one of the world's largest exporters of natural gas, which we then re-import at a higher price. We make no money from it, and we've done that with our resources too. We're such a world powerhouse for uranium, iron ore, as we know, coal, all of these incredibly important resources around the world, and we're not capitalizing on it because we're too busy bouncing from majoring in minor things, and that will come home to roost as our economy continues to languish somewhere between average and less than average, which is the prospect for our economy at the moment, because we're so vulnerable to that which we deal with China, which in itself is vulnerable to that that's coming out of the US. It doesn't have to be that way. We just need some clearer pathways out of it. But that's a conversation I'm sure for another time.
Indeed. AB, thanks very much.
My pleasure. Anytime, Mitch. There you have it, guys. Make sure you like, comment, subscribe. Most importantly, hit the notification button, and we'll look forward to hosting you next week.